Yo, what is going on, guys? Welcome into today's video. Today, I'm going to be breaking down GS gaps full in-depth and telling you guys all the sauce on how to trade GS gaps, what they are, exactly how to spot them, literally everything. I'll be going over it today in today's class. By the way, guys, I'm hosting a free live training on GS gaps on August 30th at 7 p.m. Eastern Standard Time. I'll be teaching this one confluence inside my strategy that I use to pull $30,000 per month in prop firm payouts. There will be limited spots to only 500 people, and this will not be recorded, so it's free and it's live. You do not want to miss this. Make sure you register right now. It's going to be the first link in the description. Now, without further ado, let's go ahead and get into some GS gaps. Okay, guys, so I know that a lot of you guys already know what these are, but I saw it really fast for like 30 seconds. I'd break it down what a fair value gap is, okay? Because this is the main part that you have to understand. Very quick, let's just get into it. Right here, a fair value gap is a 3 candlestick sequence where the wicks do not overlap, okay? So the middle candle is what we're, looking at, okay? So essentially right here, this wick does not overlap candle 3's bottom wick, and it leaves this gap of wicks between. And this is what a fair value gap is. So if the middle candle is bullish, then this is going to be a bullish fair value gap. If the middle candle is bearish, it's a bearish fair value gap, okay? That's what a fair value gap is. I'm sure a lot of you guys already know what it is, but let's get into what a GS gap is now. Okay, so what are GS gaps? In the most simple terms possible, a GS gap is going to be the first untapped fair value gap of a given price range, okay? This is different than a first presented fair value gap. I get comments of this constantly saying, is this not a FVG or whatever? No, it is not. First presented fair value gaps only occur at market open. It's time-based only. This is not time-based only. So as you can see in this range right here, we have one fair value gap, we have two fair value gaps, we have 3 fair value gaps. But what's important is that we are in a bullish range, meaning we are going to only want to focus on this bottom but first fair value gap if we were going to go ascending, okay? So bullish gaps, their first untapped gaps of the range will always be on the bottom visually, and bearish will be at the top visually. But overall, when you start from bottom to top, it's going to be the first. Okay, just wanted to make that very clear so you guys don't use the wrong fair value gap. Now, what makes this work so well is that 9 times out of 10, they just so happen to align with OTE extremely well, like we can see right here. All right, 7/9 is our cutoff. We use OTE for our trades, and we'll notice that this happens to line up right with OTE, but a lot of people will take fair value gaps right at 0.5, and sometimes they work, but sometimes they get stopped out. And where does it run for? 9 times out of 10, it's running for the 7/9 plus this GS gap, and then it runs. Now, it's important that I explain how I came to this conclusion, and it was simply that I kept getting stopped out of IFEG trades, and I'd want to see why I was failing. So right here, I would be taking this inversion to go higher, and I would get stopped out. So I was wondering, okay, if I'm getting stopped out down here, what is to the left of me? What is down here that is catching resistance to make us go higher? And every single time, it was a freaking untapped fair value gap that was the first of the price leg, which is what created GS gaps, and why I've never heard anybody talk about this before, ever. It's kind of similar to a first presented gap, but this has to be untapped as well, which is different than what anybody else has talked about. So that is the simplest form of what a GS gap. Now, that is not all that is a GS gap. Now let's go down and just look at some actual examples of trades that I have taken. These are actual trades I've taken, and as you can see right here, if we analyze this chart, this is the bottom of the range, and we can call all of these tops depending on which kind of scale you're using. But what matters is that this is the first of that price range. And right here, it's an untapped 5-minute. As you can see, the market had not traded into it all the way over here until over here, which is where I executed my trade. And as you can see right here, sometimes I take it off the gap, sometimes I take it off IFEGs, sometimes other things. But right here, as you can see, we just, hit the GS gap, ran for an untapped target. And then where did we catch resistance on this trade? Where did we reverse again? Another GS gap right here. We got all these wicks and we started going lower. Okay, it's funny how that works. Now when we go over here, we have another one. We have one on the 3-minute, okay? Because this one was a 5-minute and a 3-minute combined. And right here, we have another untapped 3-minute. So let's just go over, because this gap is the first fair value gap that is untapped of this bottom of that range. So now when we go over here, bang, we can see the same thing happen. And what did we do? We ran the exact same trade. So let's see, we got some more over here. Well, we had a 30-second GS gap. I'll just go back in time to show you this as well. And it works like magic. Same thing. It just keeps happening. Okay. Now let's keep going. There's another trade right here. We had a 1-minute GS gap. And as you can see, price traded up into this gap right here. It then rejected off of it and ran lower. And it just keeps happening. It's very high probability. You see this happen a ton. If you really want to break it down right here of this given price range right here, this was the other day, we had a GS gap right here. And what does market open do? We reject off of it, okay? Now, what do we have up here? We have a GS gap of the higher time frame range. You can see my indicator marked out that one. And as we can see, just keep your eye out up here. It went and bang. Now, one thing I want to go over is the different time frames I use for this. So I like to stay 15 minutes or under, okay? I will go down as far to the 15 second. Okay, so 15 minute to 15 second. I know it sounds crazy because you guys have been taught to not use the lower time frames because your mentors are unprofitable, but you have to understand the 15 second is overpowered. I don't like going under that. I've done 5 seconds before. I've done a 1 second one time. I'm not doing that again. Okay, it worked, but not optimal. But 15 minute to 15 second is the range. I don't like exceeding that because the thing is, once you go above 15 minutes, the likelihood of you having another one on the lower time frame is just so high that there's most likely another one that you're just not seeing. So you want to make sure you have seconds data. It's really important. Especially, you know, there's a lot on the 30 second, I will say. And yes, you definitely get some on the 15, but right here we can see a 15 minute. So this is the max you would take right here. This is a 15-minute untapped fair value gap. So when we draw out this range right here, okay, so it would be from this high or this low to this high. We mark this out, okay, and as you can see here, we're getting that, the only gap sitting right at OTE perfectly. So there's two confluences right together. Where are we targeting? Well, we can target that swing point or even this high. And the thing absolutely rips. And without going too far into it, I do want to say I like prioritizing New York session more than Asia session, but as of recently, I started getting some data on Asia, and Asia has been looking a little bit better. But I will say primarily I am trading the New York session when it comes to these gaps, and I do believe Asia works pretty well with them, but I haven't really tested London because I don't want to stay awake for that, to be honest. But yeah, I primarily am using these during New York session. They've been super solid. Like I mentioned, these are not super complicated. There's a little more that goes into it, but they are the best things you can add to your charts. Now, I do want to let you know that spotting a GS gap and actually trading it are two completely different things. Even more to what I discussed already today that goes in to filter out whether one is a good quality GS gap or a bad quality GS gap. There's also ways to optimize your stop loss and things like increasing your probability of where in the gap to actually take the trades off of. There's a lot more that goes into this. And obviously there's other confluences like OTE and other things that add to the win percentage to make it a higher % win rate. And that's what I'm going to be going over for completely free live on August 30th, going over a completely free live training on a masterclass of GS gaps. Every single thing you need to know about it, breaking down the 3-step system I use to filter out whether it's a good gap to trade, whether it's a bad gap to trade, breaking down literally everything more in depth than has ever been publicly shared online, and it will be live. This is not a recording. I do want to let you guys know there is a 500 person limit on this free live training, so you want to get your access as soon as possible. It is the first link in the description. You do not want to miss this, I promise. This will never be recorded. You will not be able to find it other than watching this live stream. And even if you don't sign up for the free live workshop, go ahead and mark out what I've taught you in this video on your charts. Go and do the back testing. Go and do the studying on this because these things work so well. But I will say, joining this free live training will change everything and cut all of the work out of that, so I can literally just teach you everything you need to know and you can get straight into trading them. So the GS gap is the first untapped fair value gap of a given price range. Like I said, there's a little bit more that goes into it, and that's what I'll be going over for completely free in that training. So I'll see you guys soon. Remember, if you have any questions, feel free to just drop them in the free Discord or in the comment section, and I got you guys. I'll see you guys in the next video. Peace.